In this video, we go through with JL, one of our community members in Callisto, on the intricacies of the Williams certified range for swing trading and when to secure partials and risk manage while in a trade. We also talk a little bit more on the risk to reward ratio and the mindset that you should have about it while you're trading in the forex markets. If you're someone who likes swing trading, I hope this video answers your questions. Let's get right into it. What's your name and how long have you been trading with us?
JL, been 1 week.
Oh, 1 week? You just joined us 1 week ago.
Yeah.
Awesome. Okay. Welcome to the community, brother. What do you want to share with us today? What is your strategy?
I'm actually in the NZD USD trade. I'm looking at NZD USD, the 4 hour time frame. I'm looking at the WCR. I'll go to the 1 hour chart. I'm actually using the SMA 100 and 200. Yeah, because I see price has been, the price has been quite reactive at this level. Yeah, so I actually mark out the resistance. So that's the previous swing high and then I also mark out like another resistance over there. And then the price is like super near the MA 200 and it's already like reacting with some candles. So I'm slowly like scaling in my shorts.
Okay, so you are scaling in your shorts. Are you layering?
I'm not sure the term. I guess I am, if that makes it layering.
Okay, so layering is basically like, okay, as price comes higher, right, you are adding positions to your short.
Okay.
Regardless of, fundamentals or anything, you're just adding layers to your trade. But if you're layering in profit, right, that is, and with a different stop loss, right, that isn't really called layering. You're just taking an additional position, right, with an extra risk. But you have a set SL and TP. So that's the difference. Okay, so which one are you doing?
I think it's layering because right now I haven't TP yet, but I'm just looking at the price reacting. I even set one more limit order at the 0.61. Yeah, because that's a psychological, right? I guess.
Okay, that's
but
fair.
But market close with that engulfing candle. So
price is seeming like it's rejecting it. Is that the 200?
The purple line is a 200 SMA.
SMA, okay, can.
SMA.
So your stop loss is pretty huge at about 100 plus pips.
100 plus, man. I thought 50.
No, 50. Yeah, 50.
50. So I'm just going with the Williams guide So it looks a bit far I get it. Yeah. So
but that's fine. I think it's fine. Like even if your SL is far, it's okay because at the end of the day, right, as long as you are swing trading, doesn't matter if you have a 50 pip, 100 pip SL because you can be targeting 200, 300 pips, right? And if you're a swing trader, then that is your strategy, right? There is nothing wrong with having a large SL, right? There's absolutely nothing wrong, right? Okay? So I think for your case, your SL is pretty conservative, which is okay, right? But at least you're targeting a 1:1 ratio. Now, one thing that I would want to ask, right, is, okay, for me personally, right, if I were to use the SMA, right, the 200 SMA, or was it the 100 again, sorry?
The 200.
The 200 SMA, I would like to see price touch the area that SMA first. Because right now it hasn't touched it, so I wouldn't say it has retested it. So it's like, it's reaching the area, but it's playing around with you. Like it's not giving you a proper answer whether it has rejected it or not. So I know, I personally can't tell if, okay, look, is this going to be rejected in the near future again? So that means, is there a possibility of price coming up again to test that 200 SMA?
Right.
Yeah, see, even on the 15-minute time frame, over here you can see, right, so that everyone here can see. Yeah, it hasn't even tapped it yet, right? It was very close, but it didn't. So, okay, cool. Good that price decided to dump down, right, with aggressiveness. I think if you are expecting price to come back up here again, I wouldn't want to be in the trade. In my honest opinion, I would look to de-risk,
Right.
But, okay, just based on this alone, this trade idea is pretty valid, right? Using your WCR range, you have your range from here to here, right? And price rejected off, you entered off a bearish candle. Yeah, you ended off a bearish candle, you stop loss pretty conservative at 50 pips, targeting a 1:1. And I think that's completely fine because you're relatively new. The more you trade the WCR, the more you will start to understand, okay, how can you potentially refine your SL? So as I was saying, right, as you treat your WCR more and more, you will start to see, okay, what is a reasonable SL, right? Do I really put a 100 pip SL? Do I really need to put a 50 pip SL? maybe a 30 pip SL is sufficient. This is something that you'll learn along the way. But right now, the way of trading is completely fine, right? So, which is why the Williams 25 range is so easy for everyone to pick up. Because you have a fixed set of 3 rules, right? Either 1 hour, 4 hour daily time frame. You have a range of 150 pips to 100 to 150 pips, and then you have 2 points of context for each support and resistances, right? And if all 3 criteria are met, then you have your confirmation set of rules. Like it can be an engulfing candle, it can be a pin bar, it can be a doji, it can be all these kind of thing. But this will start to change according to what you feel comfortable with. Okay, you know, as we talk to our VIP clients, as we talk to our premium clients, we normally see they'll be like, oh, Nick, William, look, maybe doji doesn't really suit me, but this bearish engulfing setup works for me majority of the time. Let me start to use that and implement it as my confirmation entry. So every single person here will have a different confirmation entry based on what they feel comfortable with. Okay, and that is what you need to find in the future. So right now you're just entering based off that bearish candle, which is fine, right? It is still a valid one, but is that part of your strategy? Like, is that part of your confirmation entry criteria? Like, what is your entry criteria actually? Right? Is it clear? Is it going to be doji? Is it going to be an engulfing candle? Is it going to be a 3 candle pattern state? 3 pattern state? What? 3 candle pattern? Yeah. So which one is it?
I think I'm just looking at the candle coming down. I toggle between the 4 hour, 1 hour, and 15 minute lah. Sometimes I go to the 5 minutes. Yeah, but I actually kind of waited for the price to somehow reject. Yeah, but I need to be more stringent on my pattern. Yeah, maybe 5 minutes too low a time frame.
I personally think 5 minutes is too low a time frame, especially when you're trying to swing 50 pips to 50 pips. Animation, the lowest that you should go is 30 minutes.
Yes, 30 minutes or 1 hour.
Yeah, 30 minutes or 1 hour.
Right.
We normally stick with that. Yeah, and majority of the clients, right, maybe if I can help you out, right, it would be the confirmation criteria that they use is going to be either a bearish engulfing like the one that you see over here. Once the bearish candle over, let me just draw out again, the bearish candle over here breaks this week low, they enter, they stop loss above the area, like let's say over here, and then they take it lower to the support.
Right. I have a question.
Yeah, please go ahead.
Do you wait for the candle to close, or the moment it hits, you just enter it? Like
okay, so there are 2 trains of thoughts here. When you have a candle closure, that gives you confirmation. But again, that means that your entry will be a bit later.
Right.
Make sense? Your entry will be a bit later, but you have a higher probability trade. But if you don't wait for a candle close and you start to enter once the break of the low, then I have a question for you. Are you taking this trade during a high volume session? Right? If you're taking this trade during a high volume session and it breaks this low over here, then that means you are betting on the high volume session to continue to push price lower. Right? With volume. But if you're taking this trade in a low volume session, when the candle hasn't closed, then most of the time you are going to be on the wrong side of the market lah. Most of the time, because there's no volume, price is not going to push much. Which is why it is more important to wait for a body candle closure like outside of volume session, like your London and your New York. So let's say you're trading Asia and the candle hasn't closed. I strongly suggest you wait till your candle close, then you take. But if you're taking like a trade during like London or New York during the high volume periods, let's say Singapore time, 8:30 to 10 p.m. during that point of time, and you don't wait for a candle close, but you see a candle break, sure, please feel free, go ahead, right? Just have your stop loss a little wider, right? But you know that, okay, look, there's volume, there's a high chance that price will continue pushing.
So when there is volume, there'll be a lot more momentum. So I may want to enter premature, and not prematurely lah, but enter.
You don't need so much of a confirmation.
In the mid of the move lah.
Yes, in the middle of the move, while it already confirms a break of a candle low, right?
Right.
Because price actually broke below, just didn't close.
Oh.
Yeah. Does that make sense?
Okay. Yeah. Oh, cool.
Yeah. Okay, good. You got any other questions for like this, or like the strategy itself, or for William, with regards to the William 35 range?
I think so far everything makes sense logically. I think my issue now is still like the RR thing. I just feel like somehow we take profit a bit too early. So when the trade goes wrong, right, it just wiped out a lot of like past TP. So it feels like I'm moving 10 steps and then I'm suddenly like set back 10 steps, So I don't know, I need to see it play out in a sense, but everything has been logical except for this
That
this
part.
R thing, yeah.
The aim here is to get a high win rate instead of a high risk-reward ratio, right? The reason why we want to have a high win rate instead of a high risk-reward ratio, and that's why we've been practicing here on this channel, because the fact is, if you aim for a 1:10 or 1:20 risk-reward ratio, yes, look, okay, I can have a 5 pip SL or 10 pip SL, right? But I'm aiming 200, 300 pips in profit. What are the chances you hit that TP? Very rarely. Correct? So even if I'm taking a 5 pip, 10 pip SL, what I want to do is take partials at 5 pip, 10 pip as soon as possible, because we have such a small SL, the room for beating is very small. But for a swing strategy, right, same thing. We don't really care about the risk-reward ratio. We care about being right. And the reason is because when you're right, your psychology improves. Your mind will start to think about, okay, how can I get more of this kind of setups where I can start securing a lot more, right? So each time you get correct, you start to secure bigger positions. Because you know, okay, this setup confirms hit this level. 10, 20 pips hit this level. Okay, secure. Okay? So when you secure this amount, right, you put your SL to break even, so there's nothing to risk. Right? And yes, I do acknowledge the part where, okay, look, if you ever hit that one big loss once in a long while because your win rate is so high, you rarely get that, right? It sets you back, yes, but you are still going to be up over a long period of time.
Right. So you just
So
have
the
to
curve is going to look like
probability
this. Yeah, correct. The curve is going to look like this. Dip.
Right.
Dip. So it's still going to increase over a long period of time. You will have the occasional dip, which is fine, because if you play this game long term and you don't over risk, that one dip, that one losing trade shouldn't wipe out your entire account. Yes, it may wipe out some of your wins or maybe all your wins, but if you over a long period of time maintain that high win rate, it shouldn't be a problem.
Right, I hear you. Okay.
Yeah.
But
So
I can also feel free to go with a little bit more, because I think when I was asking the admin, right? Yeah, I think the guidelines so far, I mean, there's no like fixed guideline, but I think what I'm sensing is like, okay, the moment it hits about 20% of your risk, you can start to like take partial, blah, 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 right?
Yes,
Okay.
correct. The idea here is to put money in your pocket, not to leave your runners running, and then when it comes back, it hits your break-even point, you don't take any money. Right? You really need to put money in your pocket, because that's what trading is about, right? Taking trades so that you earn money from the market, not to hold to that unrealistic target, thinking that I'm going to make a huge amount of money, but in the end of the day you don't make it and you feel shit about yourself.
Got it. Okay,
Yeah,
I guess I just have to see it play out, but thanks for explaining.
Yeah, no worries.
Yes.
Yeah.
Can, JL?
Okay.
Can.
Very good, very good. Yeah, I don't need to say much lah. Nick has basically said what I wanted to say also lah. Nick hang out with me too much already lah, so he knows WCR well also lah. Okay?
Yeah.
Yeah. Okay. Right.
Thank you.
No
Thank you,
worries.